indexes got renewed support on Wednesday. Today we intend to discuss how the US election seems to be reshaping the outlook on a fundamental level for US stock markets, but also have a look at tomorrow's Fed's interest rate decision and the recent movement of Tesla. For a rounder view, we provide a technical analysis of S&P 500's daily chart. The count for the US elections is ongoing, yet the results pouring in tend to increasingly resemble a red sweep. Trump is currently near locking in his election as the next president of the US, while Republicans have flipped the Senate majority to their favor and are leading a tight race for the House of Representatives. The probable election of Donald Trump as the new US president opens the gate for the lighter corporation taxation and a deregulation of the markets, which could provide additional support for US stock markets. Yet Trump also vowed to impose increased tariffs not only on imports from a number of countries, and such tariffs could provoke counter-tariffs weighing on US exports. Furthermore, imposing tariffs on US imports may lead to a stronger dollar, making US products even more expensive to export. Lastly, tariffs on US imports could enhance inflationary pressures in the US economy, which in turn may prompt the Fed to reconsider its rate-cutting plans. It's characteristic that since yesterday, Fed fund futures implied a reduction of the probability of a rate cut in December, while at the same time, chances for a pause in January meeting have been enhanced. On a monetary level, we highlight the release of the Fed's interest rate decision tomorrow. The bank is widely expected to deliver a 25 basis points rate cut, and the market seems to have largely priced in such a scenario, as Fed fund futures imply currently a probability of 98.5% for such a scenario to materialize. Hence, should the bank deliver tomorrow the 25 basis points rate cut as expected, we may see the market attention turning towards the bank's forward guidance. Should the bank express a readiness to continue cutting rates, we may see US stock markets getting a boost as expectations for an easing of the Fed's monetary policy could be enhanced. On the flip side, should the bank show some hesitation towards extensive further easing of its monetary policy, we may see the US equities markets retreating as its expectations could be contradicted and the market participants may be forced to reposition their trades. In the US elections, one businessman stood out and may even have stolen the spotlight from the two presidential candidates. Elon Musk was a firm supporter of Trump, and characteristically media state that he even attributed $120 million for Trump's campaign. It's characteristic that Trump praised Elon Musk continuously in his victory speech today. Understandably, companies owned or influenced by Musk are expected to gain traction as Donald Trump seems to get elected in a possible expectation of the markets for a quid pro quo. Financial media report a rally of Tesla's share price in today's pre-market hours, and we would not be surprised to see the share's price getting further traction at the American Open and beyond. S&P 500 got some support yesterday and today, breaking the 5,890 resistance line, now turned to support. Given that the price action in its upwards movement broke the upper boundary of its past sideways motion, which used to be also a record high level, we switch our bias for a sideways motion in favor of a bullish outlook. Furthermore, we note that the RSI indicator rose beyond the reading of 50, implying the buildup of a bullish sentiment among market participants. In a word of caution, on the other hand, please note how the price action has reached the upper Bollinger Band, which may imply that the index's price action is nearing overbought levels and may correct lower before advancing further. Given that the price action of the index has broken a record high level, we set the next possible target for the bulls at the 6,150 resistance level. For a bearish outlook, we would require the price action to form a lower trough than the last one, which would imply that the index has to break the 5,890 support line and continue lower to also break the 5,675 support level clearly. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at Iron FX, we wish you a solid trading.